Good afternoon, ladies and gentlemen. Welcome to our special show, Market Guru, where you get to meet the finest brains on the Lal Street, people who've created wealth not only for their shareholders as also their PMS clients, but for themselves as well. Our guest for today is a unique gentleman, Mr. Naveen Kulkarni, the Chief Investment Officer and Executive Vice President at the PMS scheme for Axis Securities. Naveen ji has been in the markets for the last at least 25 years and has spent a lot of time with Phillip Capital, with Reliance Securities, and of course now he heads the business at Axis Securities. Namaste Naveen ji, and a very warm welcome to you, Namaste. Sir. What a good day to have you, a green tick on the Nifty, and we've seen at least the worst behind us as far as the yen carry trade problems and weakness on Wall Street is concerned. Please tell our viewers, how do you see sentiment on the Lal Street, and where do you think markets should stabilize at?
So, as far as the market sentiments are concerned, so the market sentiments are a little mixed still, I would say. There are two aspects which are playing their part. One is the global headwinds which we are seeing. Namely, I would say that there are three global headwinds that we are talking about. The first one is, of course, the interest rate hike by the central government of Japan, BOJ. The second headwind that we are looking at, or possibly could be looking at or staring at, would be the possibility of US recession rising in next year. And the third could be the geopolitical tensions which are there. Right? So these are the three headwinds which are there for the market as such. Right? So those are the three aspects. If I would put that into the context for India, we also have 2-3 sets of challenges that we are facing. Right? One is that growth which was pretty strong in FY24 seems to be coming off a little in FY25 at this year. The first quarter results, if I were to look at that, I would say that the results were a little mixed bag. We have seen a little bit of cut in the earnings estimates for FY25-26, right? So that means there is a little bit of slowdown than what we are expecting. So overall, I would say that the sentiments continue to remain very, very mixed at this point in time. So the market has seen some degree of correction, but overall, holistically, it is still a buy on dips kind of a market for India. That is not changing anytime soon, is what I would say.
Of course, I think, Naveen ji, one of the cornerstones of the success of investors in this market has been to courageously buy this dip, which now seems to be giving ample opportunities. In the last maybe 45 trading sessions, we've had 3 such occasions to get back into the market and make supernormal money. Let's hope that this 24,230 that we see on the Nifty again scales back up higher beyond 25,100 that we had just recently seen. Naveen ji, because you run a PMS and of course you are flooded with fresh inflows on a regular basis, where do you think is this opportunity to invest in a market like we have now? Let me just inform our viewers. Naveen runs 4,000 crores in the Axis Securities PMS, which is spread over 4 strategies, and overall about 65 to 70 stocks is what Naveen has invested in these 4,000 crore rupees. Where should fresh money go in, Mr. Kulkarni?
So let me tell you the way that the market is structured at this juncture. Right? So one of the ways to look at markets is this, that what's essentially is in terms of total value which is being on offer, and what is an area which is like little scarce. Right? So those are the two aspects that one can look at. So whatever typically tends to be a little scarce, that is what people tend to chase. Right? So if I were to go back to the scenario of 2013-14, right, that was a time frame where the quality of balance sheet and growth were the two aspects which were like little scarce, and most of the investors would chase that. Today is a scenario where growth is not a major challenge, right? So we do tend to see a 12 to 13% earnings growth materializing broadly for a huge number of companies, right? So what is tend to be a little scarce is something like value, right? So where can I find more value, right? So that is an important play that is here. So from that angle, I would say that there is good degree of value that seems to be emerging now in the banking sector. There are, of course, those challenges that we witnessed in the last quarter numbers where the credit cost went up. The banks are at least attributing a lot of it to seasonality, not on a holistic basis. So I would say that there is good amount of value which is emerging in the banking sector. There, of course, apart from that, there are, of course, a wide range of areas where one can look at investing, where there is going to be a good amount of growth coming in for the next few years. There is, of course, utilities as a space is an interesting area to be looking at, and things which are related to utilities is what one can look at, right? So these are two areas where one can definitely look at investing. There, of course, there are other aspects that one can look at. Energy as a sector can be an interesting bet that one can look at. Then, of course, we could be, of course, be looking at the momentum plays which are going on, where we have seen some degree of correction, which is, let's say, capital goods, some bit in auto ancillaries, right? Those are areas where there is still good amount of value to be still extracted, and one can be invested to make decent money in the next few years.
Okay, that's a fairly sensible way of looking at it, Naveenji. What is also happening is that somehow defense has seen a very high spike in profit taking. Some of the stocks, such as Cochin Shipyard, Garden Reach, HAL, BEML in particular, they've shaved off anywhere between 12 to 23-24%. Do you think that the best is behind us as far as the defense space is concerned? And amongst the 65 or 70 stocks that you hold, is there a defense play in your portfolio? What have you done about it?
Yes, so Shell, if I were to look at our own location in the defense theme, we have been very much underinvested in the defense theme for a while, and we have been wrong. Let me be very, very candid about it. We got the sector wrong. We invested in that sector a couple of years back. We made good money. We did exit. Um, uh, we thought that there could be problems, supply side problems, and things like that. So that's one thing which led us to exit. Of course, thereafter the sector has done very, very well. Most of the stocks in that sector have doubled from the levels that we would have exited. But the broad point here is this: that defense as a theme is here to stay. The theme is here to stay. Stocks could go up, down, sideways, spiral. All those movements can happen in those stocks. But defense as a sector, as a theme, I think is likely to do well for the next few years. A reason being simply this that the world is in a different is structuring in a different way, right? So if you look at the way India is also seeing defense expenditure, it will rise in the next few years, and more indigenization is likely to happen because there are global conflicts which are emerging. More importantly, that was the third theme which I talked about, right? So global conflicts which are emerging. There is an unstable neighbor that we are started to see emerge also, right? So there are wide range of challenges which are being witnessed in the defense space. So I would say that defense as a theme is likely to stay. The participants that one would like to invest can change based on their own execution capabilities, also based on the order book that they get, changes in themes, so on and so forth. But overall, I don't see defense as a theme going away anytime soon. It is likely to be one of those key themes for the next couple of years.
Okay, in the gentlest possible way, if I can press this question a little further, given the correction that you are seeing in shipbuilders in particular, would you be hunting in this space, or you feel that probably better prices are on their way as far as defense is concerned?
Yeah, so as far as we are concerned, we are not very comfortable with the price points. Let's say that I were to look at Garden Reach Shipbuilders, right? So the one that you're flashing, right? So I would say that this stock, which is available at a lower price, I would be better because simply put across, if I were to look at some of the shipbuilders, let's say Vasgard of Cochin Shipyard and let's say Garden Reach Shipbuilders, right? So I would say that Garden Reach Shipbuilder is one of the weaker players amongst the three. Execution challenges have persisted in this space. So from that perspective, I would say that I would be looking at a much better price point to look at Garden Reach Shipbuilders. Similarly, I would say that Mazgaon Dock is also significantly overvalued according to our own metrics of the order book versus the P multiples at which the stock is trading. Because at some point in time, we will could see some execution challenges, and that could provide us with an opportunity. So net, we are looking at better price points, but again, it varies from one investor to another investor in terms of what their outlook is, how they want to play momentum, or how they want to play value as a theme. So at this point in time, the defense, as in the stocks that we are talking about, offer little value according to our own matrices. But as a momentum theme, it could still be one of those themes which can still continue doing well. We would be looking at better price points for sure to invest.
Okay, without saying much, you were sort of revealed what your actual thought process is as far as defense space is concerned. One beautiful feather in your cap, of course, is the fabulous rally that's happened on Indus Towers. I believe this is one of your top 10 holdings, and it's worked out phenomenally well. Is this a stock that you would like to remain invested? Although a new set of very deep pocketed players have come into Indus Towers because of that, I think that highly successful block deal that happened about 2.5 months ago at about 320 rupees. What is your gut feel about Indus Towers? You see its problems ending with the FPO of Vodafone Idea?
So let me briefly tell you the way that we think about Indus Towers, right? So this is a space which is probably one of the most attractive spaces if the sector is doing well, right? If you look at telecom as a sector, globally also the amount of money which people tend to make in the towers business versus the telecom sector as such, it is more so that the tower companies tend to get better valuations than the telecom companies themselves, right? So that's been one of those things which has played out, right? But the key factor for that to happen is the improvement in tenancy. Currently, Indus Towers is operating at a tenancy of around 1.66, right? So 1.6 is 1.67 tenancy is where they are. And historically, the tenancy for Indus Towers, when Indus Towers was at 450 levels way back in 2013-14 kind of a scenario, the tenancy used to be more than two times. Then, of course, Vodafone Idea had its own set of problems. They were not able to deliver on growth parameters. And of course, the other challenges with regards to that and all led to the decline in tenancy, whether the number of towers have gone up. So if let's say that this tenancy were to rise, my belief is that India is a three-player market or probably a four-player market. That's how large the telecom industry in India should be because dependency on a couple of players is a challenge, is a security threat from the government perspective also. So we need viable or strong three players in India. So if that were to be the case, we should see the tendency rising for Indus Towers also over a course of time. And if that were to happen, the stock will further re-rate. Right. So our theme is that if re-rating happens, if the tenancy goes up about times in the next 2 to 3 years kind of a time frame, the stock will further re-rate, and of course the profitability will also improve quite immensely. Right. So in my opinion, this is a stock which can deliver a 25% CAGR over the next 3 year kind of a time frame. So we are in no mood to actually sell the stock in a hurry, or we want to go from continue to hold the profits.
Okay, and in this roaring kind of a bull market, Indus Towers is yet to reclaim its all-time high of about 550 rupees. It went through a series of deep problems, and of course now the headwinds seem to have abated, and you have a very strong tailwind behind it. Naveenji, because you've dabbled deeply into the research department as well in the other places that you've worked over the last 20 years, may I ask, how have first quarter results panned out according to you? What have been the highlights from corporate India on a generic, top level, when you see it from 35,000 feet below, that here is a market which is at a record high, and first quarter earnings are backing that record high, or the market has run up ahead of its valuations. What have been your pain points and a couple of stocks where you feel this earnings momentum has accelerated?
Yeah, so as I was saying, overall, from a perspective of how the first quarter results are panned out, so I would say that the results were a slightly a mixed bag, and to some extent, we've seen a little bit of slowdown than what it was. There are a lot of factors which have been attributed. One was election, second was the heat wave, so which has affected a wide range of sectors. Right? So, yeah, elections, of course, impacted ordering from government. Heat wave, of course, impacted footfalls in, let's say, if I were to look at retail as a space, so on and so forth, consumption as a space, hotels as a space, right? So there are various factors which are impacted a wide range of sectors. So I would say that the quarterly numbers were a little sluggish. Overall, I would say that we would have seen a cut of about 1% on the earnings for FY 25-26 time frame. So not so great set of earnings from quarter one. The bright spots, of course, were a few sectors where, let's say, the auto numbers were good. Maruti reported good set of numbers. Mahindra reported good set of numbers, right? Then, of course, quite a few companies were in line, right? So let's say if I were to look at Larsen and Tubro was in line, Bharti Airtel was in line, right? So wide range of companies were in line, and there were misses also, and there were large, big companies which missed earnings expectations, right? A few banks missed expectations, earnings, right? So good city quarter numbers. We've seen some bit of upgrades coming through. This time we've seen a slight downgrade. So it's been not been a very happy quarter, but there have been, of course, enough reasons which have impacted the earnings. But going ahead, I would say that things can improve.
Absolutely. I love this phrase. It's not been a happy quarter, but things will improve, and most likely they should. Two sets of questions, Naveenji, on the look ahead. We've seen a secular rally taking root in the pharma space. Large caps, Sun Pharma, Dr. Reddy's, Cipla at record highs. Erstwhile market favorites, Aurobindo Pharma, Glenmark, making a very strong comeback to peak levels. And of course, now you have this, a set of stocks which were found missing in action. Lupin, Natco Pharma, they have also come back with a vengeance post their earnings. What would be your favorite spaces to hunt in pharma? And do you think this rally has further legs?
So, see, typically when a sector comes in momentum, that momentum can last for 12 to 18 months. It's difficult to say that, let's say, the pharma sector has been doing well for the last 8 to 10 months. And so, from that perspective, there is still, this sector still has legs, right? So, I think the whole of FY 25 pharma sector could continue to do well. Only challenge that has started to emerge is that the value which is left on the table is a little less, right? So stocks are getting closer to being priced to perfection. So that is the only challenge which we are seeing. But otherwise, fundamentally, if I were to see the pharma companies' numbers were decent. Lupin came out with a very good, strong set of numbers. Right, major company doing well. Sun Pharma was good, right? So wide range of companies have done reasonably okay for the pharma sector. And I feel that this can continue. Only areas that we will be focusing on is how to extract value, where there is comfort. Let's say that Oro Pharma is one of our holding companies. we do tend to see value there. Then of course there will be other areas where there could be value, like Ajanta Pharma reported good set of numbers, stock has done very, very well. So wide range of companies continue to do well. Uh, so this is one of our overweight sectors at this juncture, and we will continue to remain overweight for some more time till we start seeing this trend getting broken.
Okay. The other shock in the system globally was this outlook that companies such as Intel and Amazon have presented to their shareholders for the next 6 to 9 months, demand being tepid, and of course you have this Wall Street put on the US Federal Reserve. They want to cut rates. What do you think, Naveenji, is holding back the US Fed? It's more or less certain we will have a rate cut. It is more or less certain that some parts of the US economy are slowing down. What is holding back the Fed? Is it just a calendar event कि नहीं भाई हम जुलाई में नहीं काटेंगे, हम सितंबर में ही काटेंगे, कर लो जो तुम्हें करना है?
So see, the Federal Reserve goes by data, right? At the end of the day, and sometimes they have their own set of views. So as of now, I still see the data being very, very strong for the US economy. At least the numbers are suggesting that, right? The GDP numbers were still very, very strong. So what is the need to cut interest rates, right? So the challenge that one tends to face is this, that once you cut interest rate up to a certain point, then if there are challenges, you don't have any other tool. Right? So the Federal Reserve wants to use this tool very, very judiciously, right? That's my opinion. Because at the end of the day, the Federal Reserve or the central bankers have very, very simple tools to manage, which is cutting interest rate, bond purchase programs, so on and so forth. They can't actually generate growth, right? They can supply money. So from that perspective, they will be very, very cautious in terms of what they will do. We have seen that the past actions have also led to rise in inflation. They will be cautious, in my opinion, and we will see how it pans out. There are areas which are slowing down. That is very, very clear. But September is also a good time frame to do that. Of course, critics will be there who will say that they are slow, but I think it's better to be slow than overheat or make mistakes which can be really, really challenging.
Right. Naveenji, my final question to you, sir. Look into your crystal ball and wear binoculars. Now tell us where is the Nifty headed by December 2024 and exactly 1 year from now in August 2025. How do you see this bull run unfolding further?
So I've been maintaining this for some time now, right? My view is this, that we are seeing a 10 to 12% earnings growth for Nifty for FY25-26. Let us say that we end FY25 on an earnings of 1100 and FY26 on an earnings of roughly around lower 1200, 1240. So from the end, let's say FY27 will be in the range of around 1400, let's say. Somewhere in the zone of 1250 plus and around 50, right? So it's around 1400. If I were to, let's say that, give a multiple of 20 times on FY27, my view is that next year by this time we should be between somewhere between 28 to 30,000. That's my opinion. Of course, Nifty can overshoot, undershoot, but yeah, broadly we should be in that zone of 28 to 30,000 by August.
Fair point. On that very hopeful note, Naveenji, we'll call it a day. Thank you so much, and I hope your PMS clients are very happy with you. You've made a stunning set of money, especially in IndusStars, and let's hope the other 65 stocks, 64 stocks also give this kind of a return. Thank you so much for your time, and it was lovely talking to you.
Thank you.
That, ladies and gentlemen, was Mr. Naveen Kulkarni, the Chief Investment Officer and Executive Vice President for the PMS business of Axis Securities. He manages 4,000 crore rupees on 4 strategies and has about 65 to 70 stocks in his portfolio. The top 5 picks are Indus Towers, KDDL, the watch company, ICICI Bank, Thomas Cook, and an auto ancillary, CIE Automotive. Thank you so much for your time. I hope you enjoyed the conversation as much as I did. Please stay tuned into Business Today Television. The news on the markets continues on the other side of the show. Thank you for watching.